The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters. I'm Steve Rhodes. Tom is going to be on his way back from Dallas today. He was out at the Traders Expo out there. And if we take a look at the markets right now, you got the Dow up 116 points, S&P's up 10, small caps up 6. You've got the composite up 17, NDX up 14, New York Stock Exchange up 0.9%, up $68. So leading the charge right now is the Dow. Dow up 0.9%. We take a look at King Dollar, down 24 ticks right now, trading out at 82.14. Gold off $23, trading out at 16.11. That's what I've got up on my screen. If you are watching us on Tiger TV, and if you're not, you can go to the homepage of TFN.com, click on Tiger TV. You'll be able to watch this show live. You'll be able to see the charts that I put up on the screen. You'll be able to take a look at the patterns. In fact, in the gold contract here, the continuous contract, I've got two beautiful patterns out there. This is on the 120-minute contract. You're taking a look at a butterfly pattern and a Gartley. Both are sells. The butterfly pattern happens to be the light blue area. It's a 1.618 butterfly. Completed at a price point yesterday, early in the morning at about 4:10 a.m. as gold got up to $1,638. Hung out there for just a bit until the 2:10 in the afternoon time frame when gold sold off. Now, what you also had was you had a Gartley sell pattern, a 0.786 Gartley sell pattern, just simply all coming off of the swing point at about 8 a.m., 8:10 a.m. or so on May Day, May the 1st out there. Gold selling off a bit here. Uncle Ben, I believe, is speaking at about 10 o'clock, so he must already be out. And so just really watching market behavior to see what's going on out there. And one of the things you saw, or you didn't see it, but I certainly did as I switched over to the ES Mini. If you were catching me on the 9 o'clock show, folks, and I kick things off for TFNN at 9 o'clock, you can catch the archive of that show on Channel 9. You can, 9 o'clock, Channel 9. This show, what station do you think you'd turn to? 10 o'clock, Channel 10. So you can catch the archive of the Money Master Show on Channel 9. And what you do have is a little bit of a sell-off here right now. Now, you had one heck of a, during the 10 o'clock, this is the 30-minute chart. We can go ahead and put it to even a more intraday time period. But there were 85,000 ES mini contracts. Let's go put this down here to a 5-minute chart. Let's go see when all that came in. We had the biggest pop right here. That biggest pop is at between 10 and 10:05, a total of 26,000 contracts. Now, I thought at 7 to 7:30 this morning, really more specifically, was from 7 to 7:05 when he did 6,200 contracts, that was going to act as a support area. Well, you can forget those numbers when you take a look at these numbers here. So is this just a one-hit or 1.5 day hit wonder in this bounce? Time will tell. Right now, you want to, take a look at the currencies. So let's go switch over to the currencies and see what it is that we have going on over there. We will switch over to the Queen first. The Queen here, you've got the euro has sold off quite a bit from the 9 o'clock show, even though we didn't cover the currencies. It was trading up as high today in the 1.26244 level, trading down right now in the 125. I'm sure that if we take a look and put this on a 5-minute chart, we'll see something similar with regard to the sell-off, and still no reason to get too worried out there. Let me go ahead and put this back here. I think that was the daily chart I had up. Yeah, that was the daily chart. Now, what the euro is trying to do, one of a couple things. The largest bounce on the euro would be, what the heck was that? Okay, well there goes the butterfly pattern. So let's try that again. The largest bounce would be going from the swing point high in February of 2009, February 29th, David White's birthday, leap year, baby. And you go from the high of 1.34844 all the way down to the low in the euro so far that was put in on June 1st. So what you would be looking at is you'd be looking at a dead cat bounce into the 127,442 level. So it's got some more to run. If we take a look at some retracements off of, we'll use two other swing points. We'll use the one from May 1st all the way down to the lows. And if we take a look at that, you'll see that the point 382 is in the 126 and change range. So that's a area of resistance, and we'll take one last set of swing points out there just to see if we have any convergence coming together at one spot. And you can see that after the last set of swings, so let me go ahead and delete this. You've gotten the larger ones. What you saw with the euro, which is normal, off of this last set of swings here, it got up to the 0.618 retracement. When you get up to the 0.618 retracement, what are you going to do, folks? You're going to let people off of the elevator, and that is what the euro has done here, at least when you take a look at the chart. Let's switch over to the ETF indices here real quickly, see if we've got any significant sell-off coming into play here. Nothing with regard to volume, but you certainly are seeing the small caps here take back their gains for the day at this stage. So that's what's going on in small caps. Let's go to Rick in British Columbia. Rick, thanks for calling. Thanks for holding.
Hey, I liked that line yesterday. I think it was you. It said, "I'm not a poet, but I'm a what?" That was good.
Sometimes things just come.
What was that again? Because
I don't remember. I'll have to remember. I don't have.
Okay. Well, anyway, when you do, let me know.
Okay. I'll have to go back. I'll listen to the archive for you.
I was going to use that line to somebody, and then yesterday, and I never did, and then today I was going to do it, and I forgot about it.
Oh, that's too funny. That's too funny.
Hey, I'm looking at, you looked at MOS, which we're talking fertilizers here.
Yep.
And I'll just look at Intrepid, IPI.
Okay. So you got Intrepid Potash, their high is 35.65, a low of 18.42. And let's go ahead and punch that chart up on the screen. And so on IPI, tell me what you're looking at there.
I bought it, and I thought it would rally to 2084, which, using Tom's stuff, is the real price over the last couple months.
Yes.
And look at the high of today, like right to the T.
Yes. So that's
now, and it broke on lighter volume from there. So, I thought, what, it's going to probably go there, and sure enough, that's where it went today.
Yeah.
Now, like a lot of stocks, the break 3 days ago was on lighter volume.
Right.
So it looks to me like I might think about buying it at $19. But
yes.
I remember phoning you about, because it broke, on quite a bit of lighter volume from there.
Yes.
But you looked at MOS, and it looked pretty darn bearish. So what I did is I put IPI on a 3-year monthly.
Yes.
And it's really confirmed an ABC down.
No question.
Like a lot lower levels.
Yes, no question. And so when I take a look at the mosaic chart, that's nothing more than playing the bounce here.
Yeah.
So there was absolutely not a long-term trade. It was saying, okay, I want to be able to go ahead and play a bounce, and I was looking just simply at the material sector, which gave the first clue that would be, if you were going to play a bounce, that was starting to turn up a bit. And then when I'll go ahead and put the mosaic chart up on the screen for those folks that weren't watching the 9 o'clock session here, and what I saw out there, Rick, was the test of that October 4th area. And that was a real nice test because it came back there on substantially lighter volume. That had 15 million shares, folks, on October 4th, came back and tested that with 4.5 million. Now, what it's doing today, it's doing what it's supposed to do, just like you're pointing out in the case of IPI. In this case here, the first thing it's doing is testing the swing point from May 29th. Got up there, that has 3.3 million shares, got up there, tagged it. Now it's trading a bit lower, and we'll just watch to see how this thing trades as well as the general market. So I did not look at these as any type of long-term trade at all.
Yeah, no, exactly.
And I agree. I think if we even put Mosaic on a longer-term chart, if we put that on a monthly, the danger here is that it is trading inside that October 31st, 2008 bar. And I'm pretty sure that's what we were looking at when you and I looked at these charts maybe a week ago or so, or a couple weeks ago, that it until it clears that area, it really wants to go, in the case of Mosaic, wants to go down to 23.96. You're at $48 right now.
Yeah, no, that's right.
Yeah.
All right, well...
but nice call. So did you get out of your trade?
Yeah, I did.
Did you?
Oh, yeah. Well, it started at the open. It was so light. I was looking for around 2080, just a hair under, and then finally I just said, just go under the bid. Just let me get out of here because I know it's going to come back.
Oh, that's great. That's good. Good for you. So did you watch any of the hockey last night? Are you watching the games as long as they're on the West Coast?
I did. I haven't watched a lot of it, but
yeah.
I did.
Yeah. Oh. Well, it was nice to see Lord Stanley's Cup in the arena. And so,
that's right.
The L.A. Kings looks like they're going to have to, New Jersey's either going to turn things around. Now, they did have, who did they bring back last night? Peter Sikora, I think, maybe?
Yeah.
So,
no, it's
good to see him out on the ice.
Yeah, no, you bet. But anyway, and one stock, if you ever want to look at a bellwether, I think, and there's always, IBM is one, but that Triple M, I just thought I'd mention that one to you.
Yeah.
Yesterday's move was on, 10 to 15% lighter volume. I don't know if it's setting up an ABC down, but whenever you got free time, that'd be a nice one to go over, too.
Yeah, okay, so...
And it's quite currency-related, too.
Yeah. Absolutely, I'll do that.
Thanks a lot, man.
All right, my friend, thanks for calling. So right now, folks, you got the Dow up 75 points, S&P up 5, Composite up 6, small caps up only 1 point as we speak right now. So let's go ahead, as long as we are on 3M out here. Let me go ahead and put 3M on a long-term chart here, a monthly chart, I should say. Let me go ahead and refresh this and grab some more data. There we go. Now, what I'm also going to do here is let's see if this thing is in a confirmed long-term bullish or bearish stage, just simply by using the tool that I have in that special report that you can grab over at the homepage of tfnn.com. And literally, it's been I really do appreciate it. We're going to get close to 1,000 folks that have gotten that report. I want you to get that for yourself, get that out there for others. Please do yourself a favor. Go over to the homepage of tfnn.com. It is a great way to be able to manage your long-term money, to understand when to be in or when to be out of the market. So 3M is one that is right on the cusp right now. We are taking a look at that, on a monthly basis. I'm going to call it the 50 and the 200, but you have to adjust it because we're looking at a monthly chart. So we're looking at the Stevie indicator, and right now you've got the 50-day just slightly underneath at 85.81 versus 85.85 on the 200. And, if you just did nothing more than take a look and you were in and out of a stock. Now, you can use it for the general market if you want. Just depends what it is that you're trading, meaning that if you are mostly in large cap stocks like the Dow stocks, then what you'd want to take a look at is just simply understanding the Dow. You can do it stock by stock basis, depends on what your portfolio looks like. In this case here, you want to make sure that as that 50 days moving through to the downside, you want to be out of the market. And then you'll catch long-term trends, and you'll stay away from the long-term downtrends, folks. Got the Dow up 71, S&P's up 5. Give us a call, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, and it is terrific Thursday, and you have still the rest of the day, folks, to sign up for Basil Chapman's Master Trader Workshop. It is going to be held tomorrow. I'm going to be in attendance, other than doing the shows in the morning, but it's going to be a excellent educational day, and you can go to the homepage of TFN.com, sign up for that. Basil's going to be with us in the next hour. He is filling in for Kate, who is traveling today, and then after that we go to Larry Pesavento from 12 to 1. Now let's take a look at got the market, got the Dow up 89 points, the S&P's up 7, Composite up 9, small caps now up 222, room 222. Used to love that show. And so let's go take a look here at what the Qs. Now, the Qs, the reason why I want to focus in on the Qs is because of yesterday's action in the Qs. And where I'm looking at first is I'm looking at the swing point, the most recent swing point, May 29th. That swing point had 44 million shares, the low of 62.28, the high of 63.15. You're trading right now at 62.80. 44 million shares. What does the market do yesterday? What did the Qs do yesterday? 58 million shares. So you were coming into that swing point with volume. Says that the top of that swing point would be tested. The top of the swing point, again, 63.15. 44 million shares. So far, what have you done today? You've gotten to a high of 63.18. So the Qs have tested that area. Volume-wise, you're doing 13 million shares. You're an hour into trading. if you did straight line math, which you can't necessarily do because you've got more volume coming in the early stages and then at the later stages. But what you're looking for, so right now you have done, in 1 hour, you've done a little over 13 million shares. That would set you up to do volume. I mean, the volume you would have today would be somewhere in the, 80 million share range. Of course, that's not how it's going to work out here. We can go down to the 10-minute chart or 30-minute chart and take a look at that. But what you have done is you've got up and over that swing point. What you are looking for here is if you're bullish, and you want to see more bounce, what you want to see, you'd love to see it close above the swing point high of 63.15, and you'd certainly like to see it do it with 44 million shares. If you just simply trade with inside that swing point and you do it with more volume, which is what it looks like right now, it says that you'll get another test of that high area. Now, what you're also running into, which is normal, I mean, as a pilot, you would be putting on your fasten your seatbelt sign, just like Rick did when he was taking a look at IPI. He knew where the stock was going to go to. He was taking a look at a high volume bar that was out there, and it went to it right to the penny. And so, he took his profits. God bless him. This is a business about making money and collecting your receivables. It's nice when you can start your day off doing that. Don't ever complain about making money. Now, you were going to run into resistance here in the Qs no matter what because you were also coming into March 6th. Now, March 6th, the swing point had 54 million shares. So when you consider that yesterday in the Qs, you did 58 million shares. It says that the Qs still want to catapult this area. They still want to be able to push up in there. Now, volume-wise, they're pushing in there. So where's the next stop if the Qs, in fact, have a successful test of this area and push higher? Well, where you're going to see the Qs head to really is this downdraft date. That's where I suspect we're really headed. You're going to see a bit of that's where you're going to have to really make sure that not only do you have your fasten seatbelt sign, you might want to have one of those bags that they put in the seatbelt right in front of you because the ride could get a little rocky. And what I'm talking about is the $107 million, the 107 million share downdraft of May 4th. That, as Rick would be able to tell you, is where the Qs, if they can get up over this area, want to be able to trade to. And once you get to that 64, 69 area, and if we just take a look at retracements, that's where I suspect is going to be our entry for taking a look at the next short position in the marketplace. Now, going to have to be paying attention to volume as we come in there and other patterns that would be setting up in the marketplace. So if we just simply on the Qs take it from the swing point high, I'll just use April 3rd. That's at 68.55. In fact, that is the swing point high. So you're looking at April 3rd at 68.55 all the way down to lows put in on June the 4th, which is down at 60.04. What you can also see, and it just simply makes sense, the 0.382 retracement, so the dead cat bounce area. So what the Qs did this morning, they got into the top of the swing point here from May 29th. They got almost into the low of March the 6th. They got almost, if you will, and really, for my work, they did it, okay? So I'm not so worried about the penny in this case here. They got to the 0.382 retracement. You get up there, you're expecting a pullback. In fact, if you don't get any pullback here, and the Qs were to go ahead and somehow crush through this area, it's telling you that you're going to get a fairly large bounce here. And in fact, it won't be the low of that May 4th date. It's going to be seeing what happens at the high, which is at 65.83, and more likely as it tries to just complete the filling of that gap, which would be the low of May 3rd, $66.18, folks. 877-927-6648. Dow up 111 points. We'll be right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these
most trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, and let's just continue following up here on the cues. I've got the 5-minute chart up on the screen, and this will give us a better idea as to the volume pattern that we're taking a look at out there. So if we take a look at the cues in the first 5 minutes of the trading session, the cues do 7.5 million shares. So let's just take the 7.5 million shares away from the 14 million shares that it's done in essence through this time period. In fact, let's just go over to the, so you've done, 14 million shares. So we take 14 minus 7, you got 7, multiply that times 6, you're at 42, plus another 3, you're at 45 million shares. So 45 plus the 7 is going to get us to about 52 million share day. That's after yesterday doing 58 million shares. That's pushing the swing point with 44 million shares. So, the Qs certainly do have the volume today, and the Qs are going to be, one of the places that you want to pay attention to. Let's go take a look at the other ETF structures out there, see if they are doing the same thing. So let's look at the SPYs. The SPYs getting into the swing point, the most recent swing point, May 29th. 152 million shares. Yesterday, as the SPY is moving up, 183 million shares. So it was pushing up into that area. Now, from here's what you want to look at from a bearish standpoint. Here's what you want to look at from a bullish standpoint. A bearish standpoint, you want to take a look at the close of the SPY. The SPY's closed under 132.75 with less than 152 million shares. You know you're going to get a rejection of a swing point for sure, and that may suggest that this move that we have, that this was the bounce in the next leg on the way down. That is on the bearish side. Now, what you've done so far today, though, you've done 67 million shares, 67 going into 152. So now what we need to do, let's go down to the 5-minute chart, and let's go see what we had volume-wise on the 5-minute chart inside the diamonds. So inside the diamonds, you know, you got huge volume out here. So there's a big whale in the pond with us, folks. That big whale says we need to be careful. Is that whale a buyer? Is that whale a seller? Well, you got both, really. We want to see who is, whether they're selling or supporting this market. We've taken a look at the whale out there. Again, just using the 5-minute chart. On the diamonds, you do 8.9 million shares. So we're just going to say 9 million shares. And if we go back to the daily chart here, was I looking at the SPYs? I apologize. Let me grab the right, let me stay in, oh, heck, I wasn't even looking at the right. Let's pull up the diamonds. I'm sorry. I got diamonds on my mind. Well, we're going to do the diamonds next, I suppose. Okay, so now we're taking a look at the SPYs. So the SPYs do 39 million. We're just going to use 40 million because we're going to round, because otherwise it's going to be too much pressure on my brain. So 40 million shares in that first 5 million. That's 40 million versus the 67 right now. So you take 27 million. We're going to round it to 30. You're looking at about 180 million without that. So that is 180 versus 152, just on the normal volume that's going on right now inside the SPY. So we're going to get some really good information here in the marketplace by the close of the trading session. But the SPYs are pushing that swing point with volume, even though they are trading underneath them right now. So that's on the SPYs. Let's go take a look at the diamonds. Who is it in the sky with diamonds? Is it Lucy or somebody like that? Lucy's in the sky with diamonds. So we're going to go look at the diamonds, and we're going to go find Lucy. So we're taking a look at May 29th. May 29th is a swing point, and when you take a look at the diamonds, 6.8 million shares. What have you done today in the diamonds? 3 million shares. So we're going to go do the same thing. We're going to go take a look at the first 5 minutes in the diamonds. We're going to go see what Lucy was doing out there volume-wise, what that whale was. You can see all of these ETFs getting hit at the same time. And so if we take a look at what Lucy was doing in the sky, she was doing 3 million shares. So that was 3 million shares. I think that was against, so 3 million. Let me go back to the daily here. That's 3 million versus, no, it can't be. Shows my daily chart at 3 million. What did let's go back here. What was Stevie looking at? Wow. Something is wrong on my chart. That shows 3.5 million shares on the 5-minute chart. So that's pretty interesting. Can't do that math there. Let me refresh this screen. Maybe I'm having a little bit of a data feed issue, which occasionally happens here with all of the different programs that we do have running. Well, I can't figure that one out. That one's got me stumped. That's a piece of the. Let's do this. Let me just go ahead and start and restart my engines out here and see if that possibly helps. So we're going to be in a little bit of a slight delay here. So that means I'm going to go ahead and I'm going to tell you guys a joke. I'm just kidding. I don't want to be telling jokes on the air. I don't want to start something. So, but we will go back and take a look right now. You've got gold trading off $28 right now. And, of course, Al says that my jokes are probably better than my singing. So now let's take a look at the, nope, nothing had reset itself. So I can't do the math here on the diamonds. I don't know what's going on chart-wise. So I'm going to have to blow that off. So we're going to have to depart from Lucy, but we are going to go take a look at the small caps out there. So we'll see how it works here on the small caps. We'll go over to the 5-minute chart out here, Windows, tile, vertical. So we're taking a look at the IWM, and we're going to take a look at that big spike in the early stages of the morning, right at 9:35, 19 million shares. So we're going to round that to 20. Now let's go back and let's go to the daily chart out here. Never seen that before. Always makes me concerned there. So now what we're taking a look at is the small caps. That was doing 16 million minus. That doesn't make sense. Is that right down 20? What the heck is going on? So 16 million shares versus, if I go over to the daily, well, something is wrong. Wow, there's a wire loose in e-signal. And sorry about that, folks. I would say at this stage, let's screw all the volume configurations I gave you, because that is not. Now there we go. That's a little bit better. Okay, got the small caps. All right, 1.8 million shares is what it did during that first 5-minute session. Okay, now we're back to ground zero. Thank you for answering that. So 1.8. So we're going to round that to 2 versus 16. So the small caps do have the volume. So we're 14 million times, let's say 6, 24, about 84 million or so coming into the swing point. That's got 51 million. So we got volume today, folks. Absolutely have volume today. Now, the small caps here are rejecting this area. So we've got to be careful. This may have been a one and a just change hit wonder out there. We're certainly going to get information as these May 29th areas here are attacked. Now, in the case of the small caps, there's a little bit more to pay attention to. What's that more? That more is October 27th. That has 129 million shares, and you're looking at the price point of 76.97. So 76.97 is important. You're trading at 76.74 right now. Let's go back to the ETFs on the shorter term basis, the 5-minute. Unfortunately, these big volume spikes get in the way of really taking a look at any volume that is out there. Other than deleting that, which I can't do, it's really not going to help me. I hate when those whales do that. It makes it much, much more difficult. But as you, if you were listening to me on the 9 o'clock show, just simply what my expectation was, what my client's expectation was when they got their newsletter this morning, was that the work to the upside on the ES Mini was done. Why? Because you did a 1 to pi, and I'm talking about sweet apple pie, A to B equals CD, and you did a 1-to-1 on the ABCD within the larger ABCD that was out there, and that said the market would do some type of pullback. So that was the expectation. That's really what it is that you want to be taking a look at out there. And if we take a look at the, let's go back and take a look at gold, see what gold is doing out here. And what I'm going to do on gold is I'm going to go ahead and put up the, the weekly chart out here, because this is actually kind of cool. And what we're looking at here, folks, is we are looking at the weekly chart. Now, when we go take a look at gold on the weekly chart, what we're looking at is we are looking at the low from October 24th, 2008. And the low out there was 681. Now, what you're really paying attention to is you're paying attention to that trend line, that dark black diagonal trend line. The next touch point on it that I've got out there on my chart is the July 2010 lows, when you had gold at the 1155 area. And when we take a look at that, what we are seeing out here is you're seeing how that trend line was broken. It was broken with conviction in the week of May 11th. Did that with 803,000 shares. Now, when you break a trend line, what is normal is to go back up and test that area. Now, you know, gold has pretty much come close to doing that, because, you know, the trend line, the line can be thicker, what have you, as gold this morning got up to a high of 1642. So it's going to be interesting to see, you know, as gold is trying to get back inside that trend line area. Right now, I still have gold on a long-term sell signal. When you take a look at the monthly, it's on a long-term sell signal, breaking the weekly as well. It's on a sell signal, and it's doing what it's supposed to do, which is get up and test the trend line as it tries to get in there. Let's go to Dan in Basking Ridge, New Jersey. Dan, thanks for calling. Thanks for holding.
No, thank you, sir. How are you?
I'm doing great. Yourself?
Yeah, doing okay.
Are you a New Jersey Devil fan?
No, sir.
You're not?
I don't watch sports at all.
Okay. All right. Well, no problem there. And you wanted to talk about volumes?
Yeah, just the volume in general.
Yeah.
And I was just wondering what your take on it. If all the high volume spikes on all the indices might be part of any type of like plunge protection team or anything like that, because we're seeing a lot of China cut rates, I guess, and
sure.
I was just kind of wondering your take on that.
I don't really have a take on the outside forces that are out there. And because I just don't have any way to really be able to interpret it. Instead, I just take a look at the volumes, especially as they're coming into swing points, or even if you're not at a swing point, understand volume areas because somebody's holding the equities, And so it just simply, what's your take on it? Just out of curiosity.
It just seems like the ETFs could give any authority. Central bankers, if they've got the funds to really move the markets a whole lot easier than, individual equities.
Yeah.
So it just would seem much easier for anybody to spike the market with the ETF versus, having to manipulate multiple equities.
Yeah. Look, it's out there. It happens. I mean, you can take a look at that, but you can take a look at black boxes and what they do as well. And so, I think what you do is you take a look at volumes and you pay attention to them. And, it tells you that you're out in the water with some whales. And, and so you just simply trade with probabilities and you trade with stops. And you do what you can to protect your profits as well. So, when you take a look at it, are you an active trader in the market? What's your trading style? How do you actually use it?
Well, no, it's that was just a one-off question. But,
yeah.
Right now I'm short the small caps, and I got limit orders in if we test the highs of today again.
Yes.
But if we blow the swing point away from the 29th, I think I'm out, and I'll just sit back for a bit.
Yeah. Well, there's nothing wrong with that. There's certainly, right now, what we've got is we've got a rejection. Now, we've got a rejection of these swing points going back to May 29th. But as, we were taking a look at it, you're also running into, and I was using the Qs as the example earlier. I probably spent more time on that this morning, just simply because it was coming into the swing point, the May 29th area with volume yesterday. And so, So when I take a look at markets, what I do know when you take, I don't know if you use the Fibonacci retracement numbers at all.
Yes, sir.
Okay, great. So, if we were to have, which I did this morning, when I was taking a look at the my newsletter from my clients, was saying, here's an area where we're going to first get some resistance. As it's making this dead cat bounce into the 0.382 area. It just simply works like that. And so when you take a look at the Qs coming into a couple swing points, coming into 0.382 area, you've got the resistance. Now, the Qs here have tested the May 29th area. And so it's gotten up above the 63.15. It's actually gotten up to a high of 63.18. And just going to have to watch the volume if the Qs close inside that swing point. With volume, it says it's going to at least go back and test the highs there. And if you close below it on lighter volume, it says the test is over. It says that your shorts look really good.
Yeah.
You might want to iron your shorts because they look so good.
As long as we don't take them to the cleaners, we're good.
I say exactly. So I don't I don't spend really, and sometimes I know this irks people. I don't spend any time paying attention to the Fed and the news and whether there's people that are manipulating the markets. I'm going to assume all of that stuff is out there. The problem is I can't put that into a trading plan.
No, understood.
What I can do is just simply watch the markets, watch the volume, understand where the danger signs are, and then just simply trade from there. And it sounds to me like that's exactly what you've done, Dan, and I congratulate you for doing that.
Well, thank you, sir.
You bet.
Appreciate your time and efforts and dedication to the show.
You betcha. I appreciate your call. You have a great day out there. Folks, you got the Dow up 63 points right now. The composite just turned negative just slightly. Apple, where is Apple trading here? You got Apple trading at up 34 cents right now. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Back, folks, 877-927-6648. And following, filling in for Kate today is going to be our man, Basil Chapman, so stay tuned for that show. Following Basil, we've got Larry Pesavento. Now, let's go dig underneath the covers here while we've got about 4 minutes left in the show and start taking a look at the sectors inside the S&P. So the number one weighting inside the S&P is the technology sector. That is the XLK. What has the XLK done today so far? It's gotten up and over the May 29th swing point. That has 7.3 million shares. So far today, you've traded 2 million shares. You're up over it. You're not back underneath it, so you do not yet have a rejection on price. So you're just up over it. And the area that you're looking at here on the XLK would be a close below 28.04. You're trading at 28.14. If I just switch down to the 5-minute charts here, just see if there's anything unusual, and we take a look at it. And I'll go ahead and put this up as well. Just see what's a real quick way for me to take a look at swing points. So you've retraced, 84% of the way coming off of the swing point. I'd actually use something a little bit lower here. But volume-wise, let's see. You would take a look at a B point if this is an ABC down that it's forming at 1020, which had 126,000 shares. You do 114,000 shares at 1050, so you still don't have the volume. 43,000 shares at 1055. So all this is really doing is coming back and testing out, on the 5-minute chart. That's all that. Yeah, it's on the 5-minute chart. Let's go switch over to the next weighting inside the financials, inside the S&P 500. That would be the financials, the XLF. That is representative. That's about 15% or so of the S&P 500. Let's get rid of the lines out here. So the financials testing the swing point of May 29th. 1423 is a high. 73 million shares so far this morning. XLF getting to 1424, over by a point. 40 million shares. So 40 million going against 73. The financials have absolutely some juice in it. But let's go take this down to the 5-minute chart here and see what we have volume-wise. Where was the volume on this thing? Big volume, really nowhere to the downside. So that's interesting. So on the financials, you had some decent volume at the highs at 10 o'clock, but otherwise no volume to the downside. Financial just coming back and testing the swing point here at the close yesterday. 6.2 million shares, the high of 13.99. Did it trade down to 13.99? It sure did at 10.55. Traded down there with 1.1 million shares at 1.1, coming against the 6.2 million. But if you don't want to use that, you can go over to 1550, and you had 4.3 million shares yesterday. So that area is holding steady. That is 15% of the financials. Let's go take a look at the XLV. That is the healthcare sector. That is about 11% of the weighting inside the S&P 500. So if we take a look at healthcare, that is testing the May 29th swing point. That has 9.6 million shares so far today. You've done 1.5 million shares. So light on volume. You got up over that area. It has actually not tested the high. You're trading inside the swing point. The low is 36.42. You have traded as low as 36.43. If we take a look at volume here, again, just to punch down here in 5 minutes, it looks like that's all I'm going to have is the ability to just end here with the XLV. Not seeing any type of sell-off inside the healthcare industry. The next sector that you would look at would be the XLY. That is the consumer discretionary area. XLY represents about 10%, I believe, 11%. And then number 5 would be the energy sector. So if we take a look real quickly here, you do have the consumer discretionary. The May 29th low, 43.43. You're trading below that. That had 12 million shares today so far, 2.9 million shares. A little light there. Stay tuned for Basil Chapman, folks. Appreciate you being here. Have a great day, and I'll look forward to seeing you again real soon. Take care, folks.